Yo, 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 yo. Gold, oil, dollar pairs, yen pairs. And we're going to trade retail sales. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. So good morning, everybody. Hi, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being part of the community. I'm here to teach you technical analysis, fundamental analysis, cover trader psychology with a raison d'etre of helping you become a successful foreign exchange trader sooner than later. And maybe one day when you feel confident enough to trade real money, you'll choose Traders Way as the prime brokerage to your new successful Forex trading business, and that you trade profitably and conservatively for years and years and years and years and years and years and years. Pretty cool business plan. You're in the center of it. The future you, the successful, filthy, stinking, rich, yellow Lamborghini you, or something to that effect anyways. So anyways, good morning. Let us begin. Gold pairs, dollar pairs, sounds good. Let me get trade the news going on the background here. Listen to the radio, don't you remember? We built this city. So we got retail sales at 8:30, and so I'm just getting that ready. Just in case I forgot. Gotta turn the sound off.
Net interest income coming to $12.1 billion for Wells Fargo.
No, hang on. Oh, I see. I'm clicking the wrong thing. How about that? Okay, dude. All right, so we should be good. What's up, Bashy? Bash it if you got it. Umit, I am doing good. Thank you very much. Okay. All right. Okay. All right. So here we are. We'll just start with this. Not sure what we talked about yesterday. Oh, was it that? So check this out. Like I said, entry on a monthly, entry on a weekly, and this is the target. We haven't quite hit it yet. So maybe if you're using some price action, you're looking at something like that, right? Vulnerability. But anyways, very cool though, right? Buenos dias, Odette. Okay, I guess since this is here, we should talk about this. You can download all my chart templates for free. Including these pivot points, moving averages, oscillators, the whole kit and caboodle, all my templates, all my profiles. It's hundreds of things that you can put onto your MT4 so your charts look like mine. Also, I'm going to send out one last reminder email either today or tomorrow or the next day, but sometime soon, that will allow you to sign up for FX Bootcamp training at 62% off. I sent it about a month ago before I went to summer school. And it's a summer school discount. You should be in summer school. So I'm going to send out one more reminder. I haven't sent out a reminder in a month. So anyways, so super last chance. So to get that email, you have to be on that mailing list. So go to charts.fxbootcamp.com, get the templates or just get the coupon, one way or the other. Okay, we talked about yesterday. Does anyone remember how I described the European economies, both the euro and the pound? I guess I don't even have pound here. How did I describe them? El Crapo. Actually, I didn't say El Crapo, but pathetic, maybe? But anyways, pretty cool. Here's a swing. There's the target. And I think we talked about something like that. And you should start getting conservative now. Because we are much closer to a bottom, right? Now you might say, well, you're going to the bottom of the channel. No. I mean, that might be true, but you can't plan for that. This is technical analysis. This says get out. Then you add it up to this and this and this. There's no doubt that it's support. So you're like, well, what about this stuff down here? Well, we might actually go down there, but that's not how you plan. That's hope. The way you plan for that is you look at this old area here and you say, oh, well, if we're going to get that low, then between now and Monday, we're going to hit this area, and then we're going to come down and hit that area next week. So once again, the message today is you need to be thinking about next week. Okay? No, Raymond, that's not a video training course. That's part of the live program. Okay. Okay, that's what you would plan on. Will that happen? We don't know. But that's how you plan it, okay? All right, that's cool. So Europe's having its problems. Yeah, sure. Nothing new, right? Commodity currencies, we isolated a little bit yesterday. This one's stuck in the near the mean. And we got a little bit of supportive action here. And then we got some resistance action here. And it's sideways in an upward market, which probably means take a break. Oh, sure, Raymond, not a problem. Okay. Oh, were the numbers good out today, Brooke? Very cool. So I'd kind of trap this somewhere. I mean, wherever you want to trap it is fine. I could see you could do it lower. You know, I'm kind of waiting for a break. Okay. And Aussie, I think we had this similar to the Kiwi, didn't we? Well, a little too close. Okay, if you're a bear, you're looking to roll this over like this and keep it in a range. I think what we talked about yesterday is that this is a monthly bullish setup. This is a weekly bullish setup. Therefore, whoever's taking these setups is planning things for like higher high, higher low, higher high. But then when you get to this area, this will probably be a take profit, and the bears will comfortably help us out, meaning they'll take it down. Okay, so bulls are trying to get it up to that circle, and bears are more than happy to help the bulls take profit, which means they'll try to force us out. No, I did not, Azabu. Good morning, Vladdy. Okay, that's what a bull is thinking. Okay, cool. Anyways, anywho, I think what will maybe happen, well, I think maybe, is that between now and August we get some sort of pullback, and maybe, just maybe, that allows us to buy some dips. Okay, that'd be cool. Okay, so there's that beast we talked about yesterday, and I laughed about it being pathetic. Okay, bears, when the market opened on Sunday afternoon, had a plan A and a plan B. So this whole area here is their sell zone, their sweet spot. And the weekly target is actually here. But this whole gray area, that's the monthly. That's the monthly target. So we've now hit weekly/monthly targets. Do you think like that's going to act as support? Okay. And now to make this really interesting, based on this entry on the first minute of the first day of this month, our wonderful technical analysis told us this is our bottom. Isn't that nice? This entry says, yeah, when you get down to here, take profit. Now, one of three things profit. One of three things are likely to happen here. One, full-on reversal. Two, it drops like a ton of bricks and goes lower. Or three, we move sideways and do nothing. How do you mitigate this? How do you handle this? Cool. PVP got 40 pips. Cool. The only thing is we're talking about a very technical trade at, I can't see that, 137. We're now at 134. This is a 300 pip move. So congratulations on your 40 pips, but that in fact, to get your 40 pips, you had to sell like around here. So PVP, congratulations on the 40 pips. But let me also very humbly say that that's a horrible, terrible trade. And I'm not trying to be mean. I'm not being facetious. It's true. It's true. If you were selling in here and got 40 pips on your pound yen, that's a terrible, terrible trade. But I'm glad you got lucky and got money. But that's terrible. Okay? That's like you sold at double support. That's terrible. But let's talk about this, right? This is a monthly swing. It's very technically straightforward. Now, of course, when you did it, you didn't know it was going to go down there. But if you're a bear, there's two, right? There's two places to sell, plan A and plan B. And so maybe this drop, you decided to sell a 382 roll reversal type thing, okay? So you'd have to be not on a 4-hour chart, but on probably a 15-minute chart. This 5A cross down would be your entry. On a weekly basis, this is where you'd assume a counter trend. On a weekly basis, this is your re-entry, okay? On a weekly basis, this is your re-entry. And now we just hit our weekly and our monthly targets, all based on right there. Okay, so once again, take the swing trading course. Okay, take the swing trading course. Okay, these are all very definitional type trades. Okay, this is your sell zone, this is your sell zone, and this is your sell zone. Okay, so we're talking very straightforward if you're already a bear. So the question is, are you concerned about global macroeconomics, and do you hate the Great British Pound? And if you had those two things, ciao, not a problem. And the technical analysis, when you have the fundamental bias, that technical analysis is really straightforward. Okay? So for the bajillionth time, if you're looking at your charts to tell you what to do, you're not using your charts properly. Cool, 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 cool. All right? Euro. Here's an interesting thing about the euro. First of all, it's been moving sideways a little bit, but you notice how we made a lower low? This might be an indication, okay? Also, you see, I had two scenarios where it kind of drops and then moves sideways or rises and moves sideways. But nonetheless, if you're already a bear looking to sell this, okay, this is the actual perfect entry, okay? And you got sort of a mini breakout. What you should be doing is planning on follow-ons, okay? Now, if you get into here, be cognizant of that being support, and in the summer, this is generally sideways, okay? But very interesting, right? So M3 down, so there might be something like this, and then down, and then the risk is that it does this, okay? Now, if you're selling here, you're not thinking that. You're thinking lower. But this is where your risk increases, right? You see that? Oh, right on, PVP. Yesterday, my webinar was over an hour and 15 minutes. Whoever asked for a longer hour, at least an hour. So the only time I did like 40-minute webinars is when I only slept like 3 hours. And I was in a dormitory, well, a house, a Harvard house. Okay, so you guys can look it up. I was in Kirkland House. If you do some research. And I was just like 2 doors down, 3 doors down from the room where they made Facebook. But the way they break it out is you have entryways. So I was in the I entryway, and Zuckerberg was in the H. Okay, I was I-34, and I think he was H-32 or something like that. Not right. So I was in a different entryway, but you know, that close. Yeah, welcome back, Naomi. Okay, so anyways, I just make sure you recognize that that's an increased level of risk for bears. It's not a good entry for bulls. Okay. The fact that we blew through that is not a good entry for bulls. Yes, this is technically monthly support, but we already had that opportunity and it's failed. Like if it was going to reverse, it would have reversed already. So yes, I'd be careful there if I was a bull. Ultimately, in the back of my mind, always in the month of July, I'm thinking sideways. Even when it looks like it's trending, or it looks like we got a good start to a trend, in July, right or wrong, I always filter it and say, you know what, it's going to drop, maybe even make a lower low, and then it's going to pop back up into the range. Okay. So, oops. So I might be wrong for doing that, but, you know. USD CAD, very similar to the CAD yen. Not incredibly anything. But I'll tell you what, if you're a bull, this is your plan A. If you're a bear, this is your plan A. Okay? And then you have to decide, are we trending, right, or not trending, right? So this is for you to make decisions. You say, well, it's not enough on this time frame. Let's change the time frame. Okay, a little more bullish or bearish than bullish. So what would you do here? Okay. Well, in that case, you would sell here. That's what we already talked about. This is why you got to have a top-down approach. So that looks really simple, right? Sell off the 55, sell off the M2, sell between the pivots. Great. Drop into a smaller time frame, and many people don't see it. Okay. Okay. This is the price, your plan A. So let me ask, did other people have a plan A, the same plan A as a bear? And was it possible that even when we were back here, they said, well, if we get to this, I'm going to throw an order just slightly below, and I'm going to sell here because this is my plan A, my plan B is above. So they waited all of Monday, and then at the London Open, pa-chow! They sold their plan A. Is that possible? I mean, reasonably possible? If you believe that's reasonably possible, that this is Friday and this is Monday, somewhere between the Friday's close and Monday's open, professional traders said, yeah, I'm going to sell it up here. And if that's true, if you believe that's reasonably plausible, then these guys had trade plans a day ahead. That on Friday's close or Monday's close, they weren't thinking about, oh, what am I going to do today? They're already thinking, what am I going to do tomorrow? What am I going to do next week, right? On Friday, they're thinking, what am I going to do next week? And they say, well, I'm going to sell this higher, but it's probably going to open low, so it's going to need a whole day. So maybe Tuesday, maybe Wednesday, I'm going to get my shot. So they start planning it out. They actually put an order here, right? A sell order. And it came up, and it hit it. And how long did it take to execute? Instantly. That's why I think there was actually orders here. Now, that's a lot, right? It took a lot of money to turn this market around, don't you think? Okay. Were there bulls in this market? Well, this is the bullish plan A, as I told you. So somebody bought it, okay? And then what? Up, 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 down, down, roll reversal, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down. Okay. Uh-oh. So these guys should stop buying. Don't you, right? So now what? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 take profit. You're like, why aren't we going for the M1? Well, like I said before, I think it's summer. I don't believe anything. I don't believe anything. You don't have to take profit here, but you should always be suspicious. If it can be support, it probably will be support. Okay? But put yourself in that mindset. What are you doing over the weekend? What were you doing Saturday? Did you have a plan A up here? Or do you just wait for the market to open and you're like, oh, I guess this is London Open. I guess this is my London breakout strategy, so I'll buy the dip. And then today you do a London breakout strategy and it didn't work, and you're like, oh, go, dang it. Whatever. Okay? Professionals are thinking ahead. That's all. Okay? If you're reactionary, if your trading is reactionary, you're not in control of your trading. And if you're not in control of your trading, nobody's going to give you money to trade. Okay? And the only way to get your yellow Lamborghini FU kind of money is to get capitalized. Which means instead of getting capitalized by borrowing more from your broker through leverage, that you should trade other people's money and get capitalized that way. OPM, be an opium trader, other people's money. So when you capitalize that way, the only way you can get people to invest into you and your Forex trading business is for you to be able to sit down and articulate your thought process on macroeconomics and your strategy to carry it out and your strategy to protect their money. Oh, well, that sounds like what a professional trader does. There you go. Okay. Cool. All right. So what do we do with gold? Once again, it's very sideways. There's a hint here. Okay. This is sort of a bullish area. Oh, I guess a B doesn't help. And this is definitely a bearish area. Bear. Bull. So what does this tell us? Currently, we're neutral. Okay. So if I were me, I would wait for a breakout. Okay. And maybe it comes on retail sales. Don't let me forget. Okay. Maybe it comes on retail sales. Maybe it comes from a Fed meeting, but whatever. Okay. And this will have to do with the dollar breakout. Okay. Now, what if you're a bear? Well, you're closer to resistance than you are support. And this is the sell zone this week. Okay. But on an inside week, what I typically look at is R1s and S1s as well. So it could do one of these. Okay. Or it could do one of these. It could do wow. Okay. But notice I'm not expecting anything. And one of my favorite strategies ever is to wait for it to break and then trade the pullback. So if it breaks down, sell the pullback. If it breaks up, sell the pullback. Okay? It's very clear what to do and what price to do it at. And I'm not the one fighting. So we don't know if bulls are going to take over. We don't know if bears are going to roll it back. We just don't know. Especially in a quiet market, we don't know who's on vacation. See, the Americans are coming back from vacation and the Europeans are going into vacation. Okay. One of the quietest city mornings I think I've ever had in my entire life is sitting down by the waterfront in Zurich in a beautiful August morning. I went down to a little cafe. I took a little train, which should be full of commuters. It was half empty. And I got to a little cafe, and the guy just finished hosing the sidewalk off, and he was cleaning. They set it all up. So I got my coffee and my little breakfast, and I sat there. And I do what I like to do in a lot of big cities. I like to watch the city wake up and go to work. And Zurich is not a small town, and it's got a lot of money in it because it's a banking center. And let me tell you, entire buildings were empty in August. Entire buildings. So a giant building that says UBS on it, the cleaning crew. So anyways, silver, I guess. Silver, huh? All right. Well, let's just open a new one because I don't want to confuse it. Metals, AGU, okay. All right. Okay. Cool. Put on a 4 hour. What do you need to know? Can you ever trade? You shouldn't. Of course, you can do whatever you want, right, Kane? And by the way, welcome to the family. Noticed you signed up yesterday. Very cool. I said, that's Big Daddy Kane. Okay. All right. So what do we do here? Feel like I'm lacking some information, but we have price action. So if you want to kind of go shorter term, you can see we had a bottom, okay, and a 1, 2, 3, and yet another price action move, right? So this is pretty easy. Up, 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 down, down, buy, up, 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 down, down, buy. This should go up, 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 up if you're a bull anyways. And then somewhere around here, maybe around here, you know, somewhere around here maybe it comes back around. Now because this is a hard top, it's much more likely to, okay, because I'm thinking we're always going to be in a range. So if we get up here, that would probably be a hard take profit. So that's just based on price action. That's only one of our leading indicators. To add more leading indicators, I'd like to take a look at this. Oh, snap. So I said somewhere around here, we should take profit. This is the hard take profit. This is an M2. This is the actual target. You guys made me miss it. You guys made me miss it. You didn't tell me. Hang on. My fault. Sorry. My bad. My fault. Here we go. Oh, they killed my audio. Oh, this one. Caught on silver doing this. Yeah, I'm going to move this to... So anyways, I don't know if you posted it. Yeah, I did, Barry. I just got back. I don't have my head screwed on straight.
12,
yeah,
10, cable
thank
now
you.
trading at 124.28. Better stuff, better than a 1 year low in cable.
Okay, see the sell? So better than expected, both core and headline. Once again, makes it difficult to cut interest rates when things are good. I'm still a little perplexed by the whole cutting interest rate thing. That's interesting. I guess with the strong dollar, maybe. Yeah. Look at that big year-over-year negative. Wow. Don't you remember? Listen to the radio. La 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 la. Look at all this support we're on. Thank you, Jimbo. Appreciate that. Sab says, hey, don't you think interest rates are already priced in? It's not the element of pricing in for me. Like, that's the issue, because it's just like, why would you cut interest rates when retail sales are red hot? You know, like, it just doesn't make any sense. But Carter put a non-economist central banker at the Fed, and he paid the penalty. He lost the presidential election, and the economy spun out of control. And then Volcker came in and purposely created a recession. Drew, I prefer, I'm a trend trader, so I prefer swing trading and position trading. Which gets translated into sort of a trade of the month, trade of the week, trade of the day, and ideally when they line up, but not always, of course. Okay? Now, in this case, Drew, we're scalping. So remember, your trades are typically at break even within the first 3-4 minutes. No, Sammy, because an OMO is done by the Fed with invisible money. So it's not a flow trade. Okay? The only time you're going to affect the dollar is when it's foreign money. Yeah, Drew, you'll fit right in with the family here, Drew. Okay? You'll fit right in. That makes sense to me. Okay? So we're just pissing around with the retail sales scalp, but yeah, I tend to look at charts from this time of frame, but I'm planning for tomorrow, I'm planning for next week, I'm planning for next month. I'm actually thinking about August, September, October right now, okay, in here and in here. But you still have to, drop into these small time frames, okay? Okay, oops. So the scalp is this. But if you recall, before the news, we found a lot of support down here somewhere, right? So make sure you're putting all this together. Okay. But a scalp is a scalp is a scalp. You're just trading the volatility. So the market took it down here. So it's not your fundamental analysis. It's not your bias. It's nothing but volatility. And your rules of engagement in that type of trade is, sort of in here, re-engage the volatility. Now, if it comes up like this, so you lose 20 pips, it doesn't matter. Your swings are producing 200 pips. So a pissy little scalp, first of all, they're not that important. And second of all, it's just you're just following the rules of engagement. Again, there's no real trade planning. There's no real bias. It doesn't indicate your thought process, your point of view, all that kind of stuff. Sure, Drew. My comment earlier was there's no reason for the Fed to cut when we have a growing economy, like GDP is up, right? Retail sales is up, so on and so forth. CPI is not down, okay? So like when you do the GDP, right? You guys know this, GDP is equal to government spending plus business spending plus consumer spending plus net X. Okay, so government spending is steady, but business investment is still pretty okay. Consumer spending is still pretty okay, which means this is still going up. Okay, we might be losing when the dollar's strong. We'll lose some here, but we gain it somewhere else. Okay, we'll gain it somewhere else. You'll see it in little I, not big I. Little I being inflation. You'll see that in like retail sales. So we lose net exports because the dollar gets strong, but then everything else that we buy at the store gets cheap. So this goes down a little bit, but then this goes up, and at least there's a net effect kind of thing, right? But is the economy bad enough? Like, is GDP bad enough? Or is retail sales bad enough? Or little I bad enough that the Fed needs to come in and save us? Well, shoot, retail sales was double what we expected. Doesn't seem like we need saving. Now, there might be this aspect that Japan has low little I inflation, right, for 25 years now. And we've been working at creating a higher I, raising inflation for 10 years, and we still haven't been able to do it. So the logic might be, okay, the economy is good, but inflation's still low, and we don't want to be like Japan. So we drop interest rates and we jack up inflation on purpose. Sort of like Volcker coming in and killing inflation on purpose, creating a recession on purpose.
The gains we've seen falling up better than expected. Retail sales figures.
Maybe Powell wants to do the opposite.
2.117%.
Okay. If that right? You got me? You feel me? Well, Sav, inflation, that type of inflation, it lowers your purchasing power. So, like you said, well, maybe they're worried about inflation. Yes. And salaries not being as high. Well, in that case, salaries actually get lower. So you're not quite accurate there, right? So yes, they're worried about inflation, but if you do it that way, by raising prices are likely to go up faster than wages. There's a lagging effect. They're called sticky. Wages are sticky. So inflation will go up fast, and it might take 2 or 3 years before you get a decent raise at your job, or you quit your job and get another job. I mean, it's not a quick thing. Meanwhile, inflation's going up every month. So you're actually, even if you get a 5% raise, inflation might have gone up 7%, and you're actually poorer than you used to be. So no, not in that case. So what you want to do is you want to grow the economy with no inflation, and that's what we've been doing, actually. Okay? But when you have full employment or nearly full employment, and Roman says, well, 1/3 of people are not making it. Well, that's called the participation rate. By the way, you should nearly get ready to give up on this scalp. A scalp shouldn't take 30 minutes. Where did we have support? Oh, there it is. Well, that's pretty far off. I can see tomorrow's trade now if I'm still the bear. So let's mark that. Let's mark tomorrow's trade. Maybe we can do it today. Listen to the radio, don't you remember? See, that's way out there, huh? See, there's your plan A. By the way, that's tomorrow's trades. Oh, there's Canadian news, Max. Okay. I killed it so I don't have it in front of me. Okay, this is sort of last chance. Last chance. So if I was going to do an international trip to meet you guys somewhere to do like a day of Forex trading, where would we go? I don't have the time, but I might do it anyways. Singapore? Cape Town? The Seychelles? Dubai? Yeah, I haven't been to Dubai. Yeah, Dubai, I put up there. I got friends in Dubai to say hi to. I'm really interested in seeing the new raffles now that they're done with it. New York, I might do just because I want to do something at the Harvard Club. Jamaica. You know, Andre, years and years ago, there was a guy who kept saying, come to Jamaica, come to Jamaica. And like all these people in Jamaica want to do some trading. I'm like, cool, arrange for it. I'll come out. And then he never followed up with it. Sydney. Highlander, Costa Rica. That's interesting. Are you out there now? Gave up Detroit for San Jose. Barrie, Florida. Yeah, how about Miami? Yeah, I might really want to do New York. I might maybe then do two. Do one in New York Yeah, Chuck. Well, they just redid it, so maybe they did it well. Yeah, London's nice. I just don't want to go in the fall. Barry's in Florida, but yeah, like Miami. Miami. I'd like to check out Miami. Yeah, Vegas. Yeah, I've been to Vegas so many times though. I would really like to go to Cuba for sure. Go see a baseball game. Cool. This is the last chance for this scalp. It's either going to roll reversal or it ain't. Remember, it's just a scalp. There's no love in it. I'm going to put a regression on here too, just to keep our eyes on the prize. Okay, remember I'm going left to right, not up and down. Barry's thinking Miami. Yeah, okay. Alice Springs. Yeah, sounds wonderful. Fiji. I definitely do Fiji. It's just so far away. Hey, Pegler, how you doing, sir? G'day, mate. That's not South African, by the way. How you doing, Brew? So we're just hanging, waiting on a silly, stupid 1 minute scalp. David wants to lead us someday soon on a price action course. Also, I always say, if you notice, even though it's been 15 years or something, I never say Andrew's pitchfork. I always say Pegler's pitchfork. Oh, right on. Yeah, we're just killing time. Is there anything else? We got, yeah, USD CAD's Oscar Mike. Really, not even, well, still just barely a whisker off of that. So what I'm hoping for, guys, is that, we get ranges that we can break and follow up with tomorrow's trades. So what's happening now is usually irrelevant. Okay, so there's two elements here. On a bearish side, like you can see a little bit of risk off going on. On a bullish side, okay, somebody really likes this pivot, okay? And they like the central piv, they like the M2, and they want to take it way up north. So they have a longer time frame. Okay, the last chance for short-term bears, take it off this shoulder, take it off this pivot cluster. Again, you got that's a monthly M3. This is a weekly M3. So there's definitely a cluster off this shoulder. Ultimately we don't know, right? Here's a lower low, here's a higher high, and here's the middle, and we're stuck on that middle. So really, it's almost like a 50-50. So it comes down to your bias. A bear would look for a rollover here. Now, you probably wouldn't get it today, you'd get it tomorrow. And then a bull should look for a breakout pullback and then take it up into here based on the monthly plan. Okay? So don't chase price now. So like, again, you see this resistance, and then you look at tomorrow. So tomorrow could be like this if you're a bear. Okay? And you head back down to this mean. Now, the reason I talk about Pegler pitchforks, these aren't actually Andrew's pitchforks, but David, before becoming a member of boot camp, so I guess you were just right out of the Army, focused on pitchforks a lot. So I always considered him my resident expert in regression. Yeah, I don't know if you, David, are you still exposed to Rand? I mean, Rand has a nice move over the last, what, 3-4 weeks? Oh. But that's really what it's helping most. Morning, Cliff. But the funny thing about Rand, it's a little bit unique where, like gold exporters, for example, they don't get paid in Rand. They get paid in dollars. So they're more profitable when the Rand is weak because they pay all their workers in Rand. So when gold dropped by 50% and Rand dropped by 40%, or no, the other way around, right? Rand dropped by 50%, gold dropped by 40%, and the people that owned the gold mines were actually richer. Yeah, I've been 13 years. Very cool, huh? All right, so let's go back. Let's go back. And this is like, when you get into a slow scalp, you should inevitably run away. By running away, I mean like really start backing out and say, well, I'm stuck in this stupid scalp. It's not really what I intended, but I'm short and I'm a bear and whatever. So where should you move your stop? You know, a scalp, you should never put yourself in a situation where you lose any reasonable amount of money. So, you know, if you're playing the 15 here, what do you want to use as your, you know, your line of resistance? You got your 5, okay, and your plan might be to, you'll stay in as long as you're below the 5 or below the 8. It's all kind of the same, right? Do you want to hold all the way up into here, or do you want to just cut your losses small? I like small losses, especially when it's a scalp. So you don't want to mix, first of all, pride, right, in a negative way with your trading. Also, you don't want to mix like what you would do on a 15-minute chart or what you do on an hour chart or what you do on a 4-hour chart with what you're doing on a 1-minute chart, right? So if your general plan on the scalp, now this is really messy, so let me clean this up. Okay, if you had intended, like what's your intent, right? If your intent was look left, look right, we drop from here to here. So, right, you treat this as a down, 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 up, up, sell, and looking for a new down, down. If that was your intent, that's cool. Now, where do you want to protect that? And then walk away. You're done. I mean, that was your intent. And if the stupid market wants to lie to you, if you get that, you know, stupid, ginormous bearish engulfing candle, okay, fine. If it doesn't fall, it's not your fault, right? And it's just a pissy little scalp. And then you go on to your real job. What's your real job? Analyzing fundamental macroeconomics, right? And trading your bias. And you go on to your real job. Ooh, rotator cuff. Yeah, I had frozen shoulder, so I might know a little of that. But David, you blew out your back? Yeah. It's because snipers just lay around all day doing nothing, huh? Chris is not trading over summer. Well, you know what, Chris, though? The challenge to that is don't trade small time frames in the summer. Start looking at what's going to happen to these markets between August and November. Ask yourself bigger questions. Okay, Chris? And the way I've explained this in the past is, in July, I don't even really think about making money. You're just shooting at rabbits, if anything, right? You're not putting big trades on. You're not expecting any new major moves and trend changes and stuff. I just think of the big, giant sucking sound of July. But by August, especially after NFP, I start thinking about what's going to happen in September, October, and November. And then based on that bias, I start looking at trades. Now, the thing is, I'm still not trying to make money in August, just like July. But now I'm not shooting at rabbits, but I'm getting ready to hunt big game. So if I can get some trades on in August based on what I think is going to happen in September, October, November, I'll enter the trade like I normally would, buy a dip at support. I'll put in a stop like I normally would, and then I'll move the stop to break even, but there's no target. And my plan mentally now is I don't want rabbits, I want moose. Okay? And I'm going to sit on that trade for 90 days, or I'm going to break even. Okay? And that takes a whole different mindset and a different preparation process. So maybe start that process in July. If you're not trading it at all, look at it from a daily point of view. Where is the long-term support? All right. So like I just showed on euro dollar, right? We got a lot kind of nonsense going on here. So if we were analyzing this, like where would you buy? Where is the buying opportunity long-term? Will euro dollar go up? Well, we need a weak dollar for that to happen, which means, interest rates being cut, right? But then we need something good in Europe happening. That ain't going to happen. So it'd have to be all dollar weakness. So not only does the Fed actually need to cut, they have to cut multiple times or hint that they're going to cut multiple times. Right? So it's just like, So pick your move here. If the Fed cuts interest rates and indicates they're considering more, what about commodity currencies? What about EM? Right? We can go to the high yield portfolio here. Where do I have it? Exotics. Okay? Right? And see if you can get these moving. So I plan on being in these trades for the rest of the year. Okay? Another opportunity here, another opportunity here, another opportunity here. So maybe we can get Pegler to come back. Dr. Pegler, I'm sure by now. And update us on price action. Because you can see there's a down, 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 up, up, sell, down, 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 up, up, sell, down, 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 up, up, sell, down, 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 down for the rest of July maybe, up in August, so on and so forth. All right. So this is where, Barry has volunteered to be a moderator for us, and he's going to kick people out like this Hussein guy. So I guess we need to get that going sooner than later, right? I never need a day off, David. But you're family. You're definitely family. But yeah, no. No, I don't want you to do it like I want to brain drain, right? So like a full-on price action course. That's definitely one of your strengths. Hey, do you want to go to Cape Town? Let's go to Cape Town, David. You're probably sick of South Africa, though. I was just talking to the group. I'm like, hey, I want to go somewhere international. I don't really have time. I'm still in grad school, but we should go somewhere. I'm like, how about Singapore? How about this? We should go to. I'd like to see South Africa with the Peglers. Yeah, so guys, so the swap, people keep bringing it up, but it's a good point. These pissy little trades is now, this first one here is now up 200% in interest only, just in interest payments since May. Okay? So this is a pissy little trade. It was an example trade. This was $100 cash out of my account with the leverage, of course. So, right, 100 to 1 leverage. And now we're here. It's been all of May, all of June, all of July. So less than 3 months. And that one little trade in interest only has paid me $200. But, I get my $100 back when I cash out, right? Plus, in pips, it's made 1,000. So I'm up 1,200% on the cash I actually used. Okay? Isn't that neat? Cool. Peg Lawrence? Dude, I would do that especially. We already have it all set up. We know the hotel, the catering place. We had it all set up. I just haven't followed through because of grad school. But do that with David would be a huge honor. So, and then this little pissy one a few days later, it's up 19.6 dollars on a $10 trade, so 196%, plus $95 on a $10 trade, so again about 1,000% return. Thank you, Turkey. Okay, now here's the interesting thing, right? Euro sucks, but my borrowing cost on borrowing it is free. So I get borrow this money for free. I put up $100, but they give me 10,000. I love it. I put up $100. The Europeans give me $10,000 for free. I just have to pony up $100 collateral. Then I say, hey, Turkey, I know you have no exports and you have huge loans priced in euro. Would you like to borrow some of my euro? It's great. So I have $100, right? And now I lend Turkey my $10,000, and that's how you get the 1,200% in 3 months, less than 3 months, 2.5 months. So I'm charging like pawn shop rates to Turkey on money I borrowed for free. Come on, guys, you got to be the bank. Oh, this was a monthly reversal pivot. And it's also like 7.0 or something like that. Okay, it's a pretty easy setup. Okay, and look at the price action, guys. It's currently pretty easy. Now, Erdogan is a big question mark and all that kind of stuff. But I'm borrowing euro for free. And I'm leveraging my money 100 to 1, right? Well, what do you do when you get free money? Someone's like, I'll loan you free money. You borrow as much as you possibly can, especially if you're charging someone 20% a year. You see what I mean? So now you are the bank. So next time someone says, so what do you do? I say, well, I lend emerging markets foreign currency, especially those that have big debts but lack exports. I'm like a giant pawn shop for emerging markets. I'm kind of like a slumlord. Kind of like a slumlord. Yeah. So anyways, the Fed cutting, and David brought this up right away, and if you live in one of these emerging markets, you're very sensitive to this. The Fed just hinting they'll cut interest rates makes emerging market debt more affordable. Okay? Because they're all pegged one way or the other to that dollar, the almighty dollar. Turkey's being punished because they have no foreign exchange. Why don't they have any foreign exchange? They don't trade with the rest of the world. That's a problem. Okay? So, for example, when South Africa sells gold in the global market, the owners of the gold mine, they sell their gold, they get dollars. But now they got to pay all their local people in rand. So now they have to convert their dollars to rand. The value of the rand goes up. You see what I mean? But now there's foreign currency. They have some dollars. Turkey doesn't export nearly enough, so they have like a quadrillion billion dollar in euros in debt, but they don't have any euros. So what they have to do is sell their lira to get more euros to pay their euro debt, which means the value of the lira goes down. So now the next time a debt comes up, they have to sell even more lira than they did the first time, because the first time they sold it, they weakened their own currency. So now it's weaker than it used to be, and a debt comes up in euro. They don't have any euros in the vault, so they go to the foreign exchange market, and they sell a whole bunch of their lira to get more euro, which weakens it even further, and it gets worse, and it gets worse, and it gets worse. Okay, now when the value of the euro goes up, or if it's priced in dollars, when the value of the dollar goes up, now they have to sell even more lira to get the money to pay their debts, and it gets even worse, and it gets worse and worse. It's called a vicious cycle. Okay? So where do I expect it to go? Well, really, these types of trades, I don't time based on, I don't target based on price. Okay? These are fundamental trades. I do it by time. So I'll probably stick with this until Thanksgiving. So the third week of November, I will start scaling out of any of these exotic positions. Okay? And then by the second week in January, I will be by the second week of January, I'll probably be scalping, or not holding, but day trading the lira and the rand and all that back. Right? So anyways, just fundamentals and seasonality, nothing that big. Okay. So it's not where do I expect it to go, it's when do I expect it to go. And that's a calendar-based type trade. Okay. And so, we've been going for about an hour and 14 minutes and 22 seconds, so I guess we'll call it a day. Raymond says he loves that sub-window trade. Yeah, I mean, it's pretty obvious if you look at what I did closely. But yeah, so cool. So David and I have to plan it out. When are we going to Cape Town? Well, we have to wait till they run out of water. I want the real experience. Maybe we'll go swimming with the sharks. So anyways, guys, thank you for being on my team. And once again, thank you for being patient with me over the last month while I was at Harvard. That was a really tough, I guess it was only 3 weeks, but some of those days I only had slept 3 hours. So I was probably physically and mentally and emotionally a mess. But you hung with me, and you know, the community kept me strong, so I really appreciate that, and I'm really happy to be back. All that kind of stuff. So, and I got a little more rest, so I was a little bit tired even yesterday, but glad to be back. Glad to have Pegler here. Captain Pegler? Or is it Lieutenant? So anyways, thanks guys. Peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Don't forget, you can download all my chart templates for free in the link below the video. If you're new, like and subscribe and comment. That's really important for the visibility of what we do on YouTube. So if you could do that, that'd be appreciated. And of course, visit tradersway.com and open an account today. So I will see you guys tomorrow at 8 a.m. New York time. Namaste.